Hi, this is Andy Pratt, a partner and director of investment strategy here at Bernie Wealth Management, and I'm joined today by Adam Newman, our managing partner and a senior wealth advisor on the team. This is Byte Size Retirement, where we take common retirement planning topics and break them down into bite size, 5-minute pieces. None of this is investment or tax advice, but hopefully removes some mystery and provides a solid foundation to plan off of. Remember, while we may be taking 5 minutes to talk about these topics, do not take 5 minutes to make these decisions. So clicks, clicks, clicks. Whether you're watching Kramer or scrolling through FinTwit or watching CNN or Fox News, whatever your persuasion may be, the world of media is intensely competitive. Typically the scarier the headline, the more bleak the soundbite, the more likely it is to grab your attention and get you to click. There's the old news adage of if it bleeds, it leads, and that exists for a reason. Keep in mind, though, that these news organizations are in the business of selling ads and subscriptions, not looking out for your best interests. So, Adam, what are some of the dangers of paying too much attention to what is said in the media?
Yeah, Andy, the obvious danger is you're going to hear or see something that's going to make you feel like you need to get up and start trading your portfolio. There's a real strong correlation between paying attention to the news and specifically, financial news and how that makes you feel, especially when the news goes against what you think should be happening at the time. So we all know, and we've all felt it, right? Even us in the business, when we hear or see certain things, you can see ebbs and flows in your level of anxiety. People specifically sometimes spend, their whole morning or a lot of their day with their favorite, news channel up, and they feel the psychological sway of that comes with it. So the big danger is it's going to cause you to make decisions in your portfolio that are against your long-term plans and wishes. And the people that are delivering the message in giving advice or recommendations, they don't know anything about you, your personal goals, your tolerance for risk, and or anything about your situation. So it's very generic, and like you said, it's designed and it's there to get the most amount of attention possible. So the big danger, and I really think that the one that we need to emphasize is that hearing and seeing certain things is going to make you feel like you need to go do something and take action that you shouldn't. So with that, Andy, there's lots of predictions and a lot of talking heads out there and a lot of guesswork. So how accurate, are these people that we're paying a lot of attention to?
Yeah, these people, these personalities, they're always full of gusto and confidence, and they're really good at making convincing sounding arguments, creating really convincing straw men that can be quite persuasive. But the fact of the matter is they're wrong a lot. There's actually been research done on this topic, and one of the preeminent researchers and authors is a man by the name of Phil Tetlock, who's now at the University of Pennsylvania Wharton School of Business, and he spent his entire life studying forecasting. He's written books called Super Forecasting, and what he's found in his research is that there's an inverse correlation between fame and accuracy when it comes to forecasting. Said another way, typically the more famous someone gets, the worse their advice tends to be, and the worse they are at actually predicting the future. Jim Cramer is a great example. There's a reason that people joke about doing whatever the opposite that he says to do, right? So the fact of the matter is, though, when you're a TV personality, you're put in front of the camera day after day, and you have to make hot takes. You have to grab attention. And what's going to result out of that is that you're going to be wrong a lot. That's just the name of the game. So, Adam, what should retirees do instead of watching the news?
Yeah, the easy answer is don't watch, right? And I mean, especially if you've hired an advisor, you've essentially decided to offload, a lot of the worry and a lot of the major decision making to someone else. So, first and foremost, for those that can and are not really even interested in it, they just feel like they need to tune in. If you've got a long-term plan, you've identified your goals and you feel like your portfolio best represents that, then what happens day to day and tuning into the financial news isn't going to do anything to put you in a better position. It's actually statistically only going to fight against you and hurt you. So for those that can, just tune out. You've worked decades and many, many hours, and you've spent a lot of time saving and focusing on planning for the future. So go out and enjoy the things you want to be doing. Live your best and fullest retirement. That doesn't need to involve, turning on, whatever your favorite news program is for several hours a day. And then there's another camp of people, I'll say, that they enjoy knowing what's happening in the markets. They enjoy knowing what's going on in the economy. And I'm not going to say hobby, but they like to be in the know, and that's completely fine. We're interested in it. So we expect that there's others out there not in our business that feel the same way. But if you are in that camp and you like to just tune in and it's interesting to you, always keep top of mind and know and continuously remind yourself and revisit your plan and know that, what you're seeing and hearing doesn't need to translate into you taking any kind of action in your portfolio. So, and I find that sometimes hard to do, especially when you're hearing things during volatile times in the market, like we've seen this year. But you always have to continuously remind yourself of that, and then try to tilt things towards the positive end. Meaning take what you're hearing and learning and try and use it to put yourself in a better position. For instance, this year a lot of the worry and talk has been around rising interest rates. So go around and make sure you're earning the highest yield you can on your cash savings accounts. And if the market's sold off and we're in a correction or a bear market, then that's a great time to rebalance your portfolio and make sure that your asset allocation isn't off track, and do things like tax loss harvesting. So use what you're learning and hearing about to take some sort of action that's going to put you in a better position that doesn't involve trying to time the market or trade in and out, because as we know, that's incredibly hard to do, especially consistently. So, Andy, I think that's a good recap on how the media can ruin your portfolio. Timely, definitely, with what's happened so far this year in 2022. But please go ahead and leave a comment below if you've got any follow-up questions or retirement topics that you'd like to see us cover in the future. And thanks again for tuning in. And we'll catch you next time.